Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is September 26th, 2022. And yes, Bitcoin is finally in a position where we can confidently say we can expect a huge move from this asset, this main asset in the cryptocurrency market, to about the $30,000 level. Yes, I said that correctly, the $30,000 level. All right, I'm going to show you why that is. I'm also going to show you why it's likely that we get a huge move, not only in Bitcoin, but in also other cryptocurrencies, based off of what we're seeing from the DXY. All right, and we're just going to go through, as we tend to do, the cryptocurrency market, other altcoins in our watch list, and then anything else that you guys want to look at. We're going to try to make today short. I have an appointment coming up towards 3 p.m. Eastern Standard. So let's get right into it. Hope you're having a great Monday, wherever you are. All right. So let's start out with Bitcoin, okay? This is the daily time frame. Let's get rid of this. This was for the thumbnail. And one thing you can't deny is, let's just do some basic technical analysis here. Let's keep it nice and simple. Simple is usually the most effective, okay? So we have this blue range that we've been in, okay? And this range is about 99 days old, 100 days, okay? 100 days worth of price action right here. Let's keep that up just so you all can follow, all right? And it's important to sometimes know how long things last so you can have an idea for the magnitude of a move, okay? So you got 100 days worth of price action in this range. And what you've effectively done is you've tested the bottoms, the range lows, twice, okay? You can say twice or more than once, more than twice. But effectively, what you've done is you've created a move up, tested the tops, rejected down, tested the bottom again, went up to the middle, which we know is, any channel. It doesn't matter if it's this channel, if it's an altcoin channel, if it's a channel in an index. Any channel, the top is resistance, the bottom is support, the middle is resistance if you're under it, the middle is support if you're above it, okay? Knowing those simple precepts allows you to do oodles of damage in trading channels. It's quite simple. You long the bottoms of the channel, all right, and then you short the tops, okay? And if you want to play the middles, you will short the middle if you're below it, and if you're above it, you long the middle, okay? Had you done that, you would have gotten, you would have won most of these trades, right? Now, obviously, there's always an exception because some channels, they consolidate to break down, okay, while others consolidate to break up. Now, which one is this? For that, you have to go back, step back, go into a larger time frame, gain some context. We're not going to do that because that's not the purpose, but just looking at this small channel, all right, and then knowing our larger time frame analysis, which I'm not going to go over once more, but if you go on the weekly, the monthly, you'll understand that this level that we're at now is important support, okay, on the higher weekly, monthly time frame, okay? And mathematically, we're on support, okay? We're on mathematical support given our Fibonacci extension of the double zigzag impulse to the downside, as well as the extension of the A wave, B wave retracement, and then C wave impulse of the flat correction that we've put in for the past, 500-600 days, okay? So all of that you've probably heard before if you're subscribed to the channel. I'm not going to go over all of that. Right now, I'm just going to focus on this channel right here. So just given this channel, there's a high probability, nothing's 100%, but high probability that this result in another test of the top, okay? So you've come here, you reject it at the middle, you come back down, just like you did here. You come up, you reject at the middle with the three-wave move, and then you test the top. You come down, reject at the middle with the three-wave move, but that three-wave move's a little different here. Come back down, test the top. All right, but why do I say 30K? Because you can see this top is at 25K. When you're breaking support, okay, sorry, breaking resistance, you actually go through it, okay? You go through it. You don't stop at it. You go through it, retest it, then you continue. That's why I'm saying 30K. That's the long and short of my case for 30K, just looking at the Bitcoin chart, okay? We're at support, and we've been holding support like a freaking champ, okay? We've been bullish at, this is the definition of being bullish at support. Creating consolidation reversal patterns on support, not even threatening to break support. Meanwhile, the DXY has put in, we're going to look at the DXY in just a second, but meanwhile, the DXY has put in a blow off top, literally testing and testing and testing the tops, right? Just really running and rallying. All the while, look at what Bitcoin's doing. It's holding support and consolidating at support. I'm going to jump in really quickly to show you, I'm going to show you, what am I going to show you? I'm going to show you the SPX, or S&P 500. This whole time, this is, let's go on the daily time frame. Okay. So this whole time, you've held support. Okay. It doesn't look as pretty in the SPX. Okay. But this support right here at 3663 is what you've created back in June. Okay. What did you do here? You've held it. This is what you want to do. When you're looking at market structure, when you're doing analysis, all you want to do is hold support, right? You want to be bullish at support, bearish at resistance, okay? And what do we know? According to Elliott wave theory, you see three waves down, okay, or three-wave move, that is complete. That is a complete corrective pattern. Even more, if you look at this leg of the corrective pattern, or we're looking at the SPX now, you'll notice very, very clean 5-wave impulse, okay? And what do you know about the last waves of corrections is that they always end in impulses, okay? Sometimes it's as easy as this, a 5-wave impulse, 53535, right? Sometimes it's a little complicated. It's a double zigzag or something like that, or it's a zigzag. It's a little tougher to see. But this is very clear. I mean, this is an elementary flat correction, A, B, C flat correction, ending in a 53535, 5-wave impulse to the downside. This is done, okay? And if you read corrective patterns, or AB bases, consolidation reversal patterns, you could see this as your A wave, this as your complementary B wave to this A wave. And then what you're going to get here is another A wave and then another B wave. I don't know how that A wave and B wave are going to look like, right? Because they can look like a number of things, but you need another in the SPX, okay? Speaking for the SPX, I don't know about the NASDAQ. I don't look at the NASDAQ. I don't look at other sort of traditional markets. I use the SPX as a proxy for the traditional markets on this channel. Looking at the SPX, you can get bullish, but don't think that we're up only. You need another degree of AB basing. This is simply 1 degree of AB. Whoops. This is just 1 degree of AB basing. You're going to need a second before seeing some strong upside. Okay? That's just a word to the wise if you're invested in traditional markets. If you're the type that says, well, okay, I can expect up only price action in the SPS, not so fast. Highly unlikely. Okay, nothing's 100%. But just what I'm looking at here, based off of this chart, highly unlikely that you get up only price action in the SPX. I expect more corrective price action to the upside, okay? It could be a 5-wave move followed by a nice 3-wave move to the downside. It could be a number of things. It could literally do this. It could do that. I don't know, okay? We all know AB bases, corrective price action, corrective waves come in all shapes, sizes, and colors, okay? So that's the SPX. That was a quick kind of detour, but just so you understand, this is very bullish. And unlike the SPX, Bitcoin has clearly put in 2 degrees of AB basing here, okay? 2 degrees of AB basing that you can clearly see, and which is likely to result in up only price action, okay, quote unquote up only, with, obviously you're always going to get corrections, intra-wave corrections, but you can expect some strong moves to the upside, unlike what you should expect in the SPX. So that's my take. Okay, now let's look at the underlying cause of it all right, the market mover. Of course, I'm referring to the DXY, okay? For any of this to work, the DXY has to dump, and this is what we got in the DXY. And before I do that, I'm gonna just look quickly, see if there are any comments. MB says, Ethereum Classics move in late July, early August, comparable to what BTC will do, retracing back to the golden pocket on the fib extension. MB also says the whole third quarter has followed Forbes midterm cycle chart. Google it, you'll see what I'm referring to. In October, December historically is a great swing to the upside. For BTC, I'd assume the 4650K area before rolling. MB also says we'll see if the major indexes respects this too. So in reference to seasonality, and I tweeted this, I am responded to Income Sharks. It's there's, I don't know, it's an individual or group, a trader on Twitter that has reasonable takes and, pretty good analysis, all right? I don't think that there's many people with actual analysis, to be honest. People just say stuff, and it's more like, a popularity context, but very few people actually do analysis these days, I think. But this account on Twitter, Income Sharks, does decent analysis, and they're thoughtful. Whether right or wrong, they're thoughtful. They think about what they're doing, and then they trade based off of their analysis. Anyway, I appreciate it, so I'm following. And Income Shark said something about seasonality. So seasonality is what? Seasonality is what MB is referring to. Basically, historically, in this quarter, market goes like this, or historically in that quarter, market goes down, blah, 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 right? So that's seasonality, right? September should be bearish. October should be bullish, okay? For seasonality, I would say I put it to the side. Not to say that there isn't statistically significant data to say seasonality exists, but remember what we're dealing with. We're dealing with a market that's only 10 to 12 years old, 13 years old for the oldest assets, right? Bitcoin, Litecoin. But I mean, for most assets in cryptocurrency, they're so young. So it's very, very challenging to respectably or responsibly, I should say, talk about seasonality with reference to cryptocurrency, given that most assets are under 5 years old. Most of the cryptocurrency market, the how much is it? It's 500. No, it's right under a trillion, right? Right at a trillion. Let's just say $1 trillion. $1 trillion market capitalization of the cryptocurrency market. Most of that $1 trillion market evaluation or valuation rather is are markets that are under 3 years old. Some 4 year, maybe 3 to 4 years old, I would say, just off the top of my head. So there is no seasonality, to be honest, okay? If you just want to talk about seasonality with Bitcoin, you're talking about a 10 to 11, 12 year asset, okay? Again, when you talk about seasonality, you want to see good data. You want to see like something over and over and over and over again. And I'll say, be careful with ascribing seasonality to Bitcoin. One, because look at the charts. Bitcoin does not go as the SPX or the NASDAQ goes. Bitcoin goes as the DXY goes. That is not an opinion. That is a fact. Look at the charts. Don't show me a couple months of correlation and tell me that, see, it's, linked to this and that. Of course, everything's correlated. But in Bitcoin's 10 to 12 year history, I don't even know, is 12 years? 12 years. Let's just say 12 years for argument's sake. In Bitcoin's 12-year history, show me how long it's been linked and correlated, how strongly it's been correlated to, I don't know, pick the SPX or the NASDAQ, right? I show on this channel 8 years Okay, and that's just because that's what the charts that's how far the charts go. But on this channel, I like to show how Bitcoin shows 8 years of direct inverse correlation to the DXY. This is what you should be looking at. If you want to talk about seasonality, we should be talking about seasonality in the dollar. But you know what? Seasonality is for people who can't read charts. Because if you really want to see patterns, you look at the chart patterns. So that's what I would say to MB and anybody else who talks about seasonality in crypto. Really think about it, right? Let's not parrot some sort of narrative saying, oh, because people talk about seasonality in traditional markets that have been going on for quite some time, and we've seen in the past few months some high correlation index between Bitcoin and SPX or NASDAQ, and then we just automatically say, no, be very careful. Think about it. The correlation is Bitcoin and the DXY. There's no seasonality there other than what you see in the chart. So September, right, is supposed to be a bearish month. I was saying on Twitter, and I'm not talking down on MB or anything like that. I'm just talking about seasonality in general, okay? Just to be clear. And let's go back to the Bitcoin chart as I say all of this. I was talking on Twitter. I just tweeted, like, September was supposed to be bearish. I didn't know. You should have told me, because I'm so high up on my XRP already, and I don't plan to sell anytime soon. But XRP, I was buying down here. I'm already up 40% on XRP, and that's without any leverage. And that's a 12x trade. So you do the math. That's a 12x leveraged trade, right? I bought on leverage down here, some 5 figures, and it went up 72. Now it's down to 40%, right? In a correction, right? This is supposed to be the bearish month. Again, seasonality doesn't. That's where people who don't know how to read markets, they want to oversimplify. The market doesn't give a damn what month it is. The market doesn't give a damn what month it is. The markets in crypto, most markets only care about what the underlying asset does. The US dollar is the underlying asset. If you want to see any traditional asset correlates to Bitcoin and digital assets, look at the dollar. And this is what we've been looking at. And that's not an opinion, that's a fact. We have sort of data to prove that, and we have data to disprove the seasonality argument. Okay, this is one data point. Okay, what am I doing? I'm looking for this. Okay, so just be careful with seasonality. That's sloppy analysis at best. It's sloppy, like it's sloppy, kind of lazy analysis. It's not analysis. Look at what this is. DXY, or sorry, this is XRP. Okay, this is XRP. Like I said, this is September. Look at September goes from here on out. I thought September was supposed to be bearish. So what about seasonality in XRP? That market, which is correlated to Bitcoin, as most every asset in cryptocurrency is correlated. And I've been saying bullish. People are like, what are you talking about? This is what the hell I'm talking about. I'm so high up on this position, I can set stops down here and still be in profit. This is my alarm for a stop, just because, okay? And I'm still well into profit because I accumulated down here. And again, this is a 137, what is it? 127, say 130-day accumulation period, okay? This isn't luck. This isn't like, oh, I just happened to buy. Like, I had 130 days, 4 whole ass months to accumulate this position, and I happened to take at the 11th hour a leveraged position, right? Which is something you need to be a little more careful about, right? You can't just take it willy-nilly because you got stops in. So I took that right before I noticed it was going to take off and break out. And this is exactly what it did. And we're going to look at Ethereum Classic in a second. But, I mean, here's a great example of looking into the future. This is what Bitcoin's going to do. This is exactly what I said at the opening of the live stream. Okay? Why am I saying 30K, it's because if it's bullish, what's going to do? It's going to break the resistance, retest it, just like you're seeing in XRP, just like you're fucking seeing right here. Break the channel, retest it, and then continue on its merry way. Okay? That's what we're seeing in real time in XRP, right? I just said it. For those of you who are just jumping on, go ahead and rewind if you want to rewind. But let's see. Do I have it up here? Here, let's just change right here. That's exactly what I said for Bitcoin, okay? I said Bitcoin is likely going to 30K, okay? If it's going to make a move up and out, which I think it's going to do, right? Always probability based, highly probable. It's going to 30K. It's going to reject, consolidate, and then continue on its merry way, okay? That's what you do when you're bullish. You break resistance, retest support. And again, you could say, oh, that's all theoretical. These are good ideas. Or some people say, oh, there's no, this is unsubstantiated. There's no reason for it to do that. Well, the cryptocurrency market is very well correlated. And I want to show you Exhibit A, XRP. Look what the fuck XRP did. It broke the channel, retested the top of the channel, which was resistance, turning it into support. And then it's going to continue. And it started its bull run when? In September, which was supposed to be a bearish month. That's what I'm saying. Like, throw the season out. If you really want to do well, this isn't stocks. This isn't your daddy's, your granddaddy's stocks, okay? Where you can have these assets that are really tied to a day of the week. You know, they trade Monday through Friday at specific times. Seasonality is more of a factor there. We're talking about a present and a future of digitally traded assets that are traded 24/7, 365, and correlated for now to an underlying asset that trades more than, you know, these traditional stocks. So the DXY trades, you know, on pretty much every day except Saturday, okay? Because it's the underlying asset. So you don't want to look at seasonality. You want to look at the chart. Like, don't be lazy. Read the goddamn chart, right? This is what I'm saying. Like, another example. Reserve rights, okay? It's supposed to be bearish. Could have fooled me because I'm up a bunch. And a lot of people are up a bunch. So much so that yesterday, you couldn't even buy any on KuCoin. I mean, KuCoin is like, you know, the place to get, what am I looking for? I'm sorry, I can't talk and think at the same time. There we go. KuCoin is the place to get altcoins. You could not buy reserve rights, this particular altcoin, yesterday on KuCoin, at least during certain periods of time, because everybody was buying it, okay? And you could put it, I mean, I don't know. I'm putting it here, but you can also make a case that the channel is right, is something like this. Something like this, okay? Because your initial break of structure took you up in 5 waves, and then this retraced down to the 618 of this initial break of structure. And that's pretty much where you did your consolidation reversal for the 130 days, okay, of accumulation. 130 days of accumulation. Again, I was like, let me buy some on margin, right? And this is something I was buying for quite a long time, okay, on margin, for many, many months, okay? And right now, we breached the top of, or the middle of the channel, which is resistance, as you guys know. And right now, we're consolidating at resistance. What does it tell you when you're consolidating at resistance? It means you're likely to make a move higher, okay? So it's likely to go higher, okay? Reserve rights is, and continue its bull run. And this happened in September. So again, this I just, seasonality is lazy. It's for back in the day when only things that traded were between 9 and 4:30. I don't even know what the time is. I don't own a stock. Proudly, I can say I don't own a single fucking stock. I don't trade things that have circuit breakers, okay? And That's what seasonality's for. People who can't read charts and they see some kind of spurious sort of pattern, and it's like it's really, really weak. It's weak, especially when you have these powerful tools at our disposal. Like, you didn't have a trading view back when people came up with seasonality arguments. You didn't have trading view. You didn't have the minute chart, the 5-minute chart, the monthly chart. You didn't have all this data. We have more data. Please, let's throw away the stupid seasonality. Like, I don't know, guys. Come on, we can do better. We can do a lot better. Okay, it's a new day. It's a new day for analysis. Seasonality is for dinosaurs. Dinosaurs who can't do analysis. All right. So, back to Bitcoin. Oh, damn. I don't remember what I was saying. Got me riled up. I love analysis. I love technical analysis. I respect other people's views and all that stuff. I'm just saying, guys, let's think about really putting things forth with good data, Everybody can have different opinions, but where's the data? Show me the data. Show me time and time again in the market we're trading how that applies. Okay? And if you're going to give me data, you got to give me a good end value, right? In statistics, an end value is your sample size, right? You're talking about a 10 to 12 year sample size on the oldest asset. So for most assets, you're telling me a three year, like, you can't, there's no data there. You don't understand? Like, there's no data there. I'm going to compose myself and then get back into it. And I got to stay on schedule because I have to leave for my appointment at 3. I was talking about, and this was a good digression because it's an interesting topic. So thank you for contributing that idea, MB. Okay, I was talking about Bitcoin. I was talking about how we're bullish on support. We're holding support. I talked about the SPX. SPX is holding support. Yes. Now let's go into the DXY, the market mover, okay? The DXY, okay? The DXY has been going crazy, as we all know. And it finally rejected, okay? This is a daily chart. It doesn't look like much. If you're just looking at the daily chart, you're like, Dean, like, it still looks terrible, right? It still looks like it's threatening to go up higher and higher and higher. And I would say, yeah, of course, on the daily time frame, you might not be able to see what really happened. But yesterday, something very important happened in the DXY, okay? And this channel, this ascending broadening wedge, right? As you would call it in pattern analysis or in Elliott wave, you would call this an ending diagonal, a broadening or diverging ending diagonal, okay? And I've been saying this for the past few days because I changed my count. My count was a little off, and I adjusted it. But you see, this is a 3 type structure, okay? Whoops. 1, 2, 3. Okay, so this last blow off top, as we can call it, is the impulse, the final impulse of the 5th wave of this movement. Okay, again, you can count 5 waves. You know that there is some completion. Also, you can use a you can corroborate, or you can find confluence in not only your Elliott wave count, but just support and resistance, okay? So you got these 2 support and resistance lines, right? Defining the broadening wedge, ascending broadening wedge, that's the support, and this is the resistance. The top of the line is resistance, and that's exactly where we're rejecting from, okay? Again, nothing's 100%, but by and large, and we'll go into the smaller time frames to explain this more and see really why it's exciting and it's promising for rejection and reversal. But on the higher time frames, if you get rejected at resistance and that resistance is showing 5 waves and your momentum indicators are topping out as overbought, not just on the daily time frame, but also on the weekly. okay, and monthly time frames, especially on the monthly time frames, it's very likely. Again, it's just a probabilistic game, right? All of this charting and trading, it's dealing in probabilities. The probability gets higher and higher and higher every data point you add to the thesis, and the thesis is that the DXY is at resistance. You can add to that. Let's go on 4-hour chart. Actually, let's go on the daily chart. Weekly. I just want to show you one more thing. Go on log, faithfully represent this. So you can add to all of that the fact that we just wicked above this 14-year resistance, okay? It's very likely that the dollar is at resistance, and what you're seeing in the Great British Pound, what you're seeing in other world reserve, or not reserve currencies, fiat currencies, is what you're going to see in the dollar. It's an absolute or an imminent downfall or capitulation. Would it be capitulation? No, that would just be a downtrend, a downturn, a drawdown, a drawdown. Okay, so this is what we're expecting in the dollar. Now let's go into smaller time frames, because you may ask, like, dude, it doesn't look that bearish on the daily time frame, and I would agree with you. Okay, and this is where you use your skills in technical analysis to really see what's going on. Okay, so just forgetting the larger time frames, looking at the smaller time frame. Let's go on the hourly time frame, and you can see this very clearly here. Okay, this is very this is a very clear rejection here, and this is really what's exciting, because you put in this blow off top, okay, this really strong green candle that you can see on pretty much every time frame. It's long, it's green, it hits the resistance, and immediately upon hitting resistance, you get a massive rejection that takes you down 100% of the way from this candle. Okay, you can get that type of thing and continue, but it's rare. Okay, the continuation of such a move happens when you get an ending diagonal. Okay, and you're putting in some sort of wave that's something like this. Okay, we've seen that before. Okay, you putting in these ending diagonals, but by and large, probabilistically, this is what you get in a rejection, and this is your initial break of structure. It comes in 3 waves. We all know corrective waves come in 3 or flavors of 3. Impulsive waves come in 5 or flavors of 5. This is a 3-wave move. You know this is an initial break of structure. What comes after that? Again, a B wave or a counter wave or counter trend to this initial break of structure. So you're looking now for another 3-wave move that would complement that. Okay, so don't be surprised if the DXY starts going even higher than where it rejected. You still should be, given not the price but the price action, you should still very well or be very encouraged in the prospect of a rejection. Okay, where does this invalidate? Very simply, you take your Fibonacci retracement tool of this initial break of structure and you target your phi ratio or 1618, and any breach of this 1618 would indicate a continuation of the impulse. Okay, this is very simple. Any corrective wave, any B wave, let's say, retraces between the 786 and a flat correction, between the 786, which is at right now, and the 1618. Okay, that's in a flat correction. Okay, so a flat correction is something like this. Okay, so right now we've got that 3-wave move for the A wave of the flat correction. The B wave can stop here or can go all the way up here, and then you can expect a pivot for the actual impulsive move down, which is going to be the major rally. Okay, now given the fact that both Bitcoin and the DXY are at inflection points, okay, the DXY is at a top, Bitcoin's at a bottom, you can still see some price action, both moving in opposite directions. So even though the DXY is going up, Bitcoin can go up, even though they're inversely correlated, because they're at inflection points. And when you're looking at Here, let's just pull this up because we got receipts, guys. We've got receipts. Yeah, let's pull this up right here. This is even a freaking a bookmark of mine. Okay, this is a monthly chart. Okay, for people who question, like, what are you talking about? Like, there's data, and like, what do you mean, like, the correlations? Like, crypto's been around for a while. Like, if you want to say that the traditional markets move crypto, or blah blah blah, whatever, or the SPX or Nasdaq moves crypto, like, people just say shit and parrot it. Okay, do your own research. Bring data to the table. Show me years of legitimate and solid correlation of the SPX and Bitcoin, and I'll shut up about it. Just show me the chart, and I'll shut up about it once and for all, and I'll change my mind. Because, all right, I'm trying to make money. I'm running a business. I'm going to make data-driven decisions, okay? And these data-driven decisions are based off of a ton of theory and a ton of data for my specific markets, okay? And when I'm making this decision to use the DXY as an inverse correlate to the crypto markets, this is what I'm basing it off of. This chart right here that I've drawn up, or that I've kind of put together, right? And it's essentially 8 years worth of trading data for the US dollar index, and 8 years worth of trading data of Bitcoin on the monthly chart. And you can see they're perfect mirror images of one another, okay? So that's what I mean by, like, when I say that Bitcoin is inversely correlated to the DXY, I'm not only talking about, like, I heard some YouTuber talk about it. I'm talking about experience, and I did my own goddamn research to come to that conclusion, okay? And that correlation obviously is clear on the monthly time frame, and you can sometimes see it on the daily time frame. Sometimes you can even see it on the hourly time frame, but it's not always perfect. Sometimes Bitcoin will be going up and the DXY will be going up. Bitcoin will be going down and the DXY will be going down. That doesn't break the correlation. Do you understand, right? Because that correlation that we have charted is on the monthly time frame. Guys, if you're getting value, please like, share, and subscribe. But yeah, I'm not, like, whatever happens with the DXY between here and here is insignificant, essentially, for the reasons I just stated, right? Because it doesn't need to necessarily be that the DXY is actively at this second going down for Bitcoin to go up. No, just as we've seen in the past few days, the DXY can make crazy moves to the upside and Bitcoin can just be consolidating, right? Because within that month, it'll still more or less even out to be inversely correlated, right? So, as the DXY puts in this pivot, if you will, Bitcoin is likely to pump. And this is why I'm saying that a huge move is incoming in Bitcoin. Looking at the Bitcoin chart and looking at the DXY is pretty much rejected based off of this move on the smaller time frames, okay? Not everybody can read this, but on this channel we can. This move is or sort of a corrective move to the downside, retraced 100% of that previous blow off top. You do your counter wave, you do your pivot up here, or maybe up here, it doesn't matter, and then you nuke, okay? The nuke is incoming, okay? And it's going to drop like a rock, okay? And the last thing I'll say about the DXY, guys, is here are my targets, okay? Income Sharks, great account on Twitter. Some of the things I disagree with, some of the things I agree with. I agree with 85% of what they say. But they just also talk a lot about seasonality, which I think is absolute fucking bullshit when you're talking about crypto. Absolute horse shit. Show me the data for seasonality. Okay, there's more data that I've seen against seasonality than there is for seasonality, and the N is not big enough. Just read a goddamn chart, okay? But for me, the targets and like people like Income Sharks, they think that Bitcoin can't go further than what 50, 60k or 70k, like really low ball pedestrian figures for upside targets. And I don't understand why, because I don't know what chart you can see Bitcoin going in impulse, stopping at such pedestrian levels, when in history of Bitcoin's bull markets, in impulsive moves. We've never done such pedestrian numbers. I mean, it just doesn't work mathematically with our wave analysis. In any case, the target to the downside for this is the following. Okay, and this is just a rough target, and I've put this in. And this is based, once again, on theory. This is not just like, ooh, I think, or blah, blah, blah. No, this is technical analysis using Elliott wave, which is my bread and butter. And what I did here, if you notice, and let's see if I can't pull up this, because I have an Elliott wave here. I think I've hidden. That's it. Okay. So this primary count that I just discovered, or that I just made visible, shows you my Elliott wave count for this wave up here, okay? For this wave up here. And why do I have this blue band? This blue band is my target for the DXY, okay? So two things. You can do two things here. As a pattern trader, okay? Pattern traders know that, let me move, I just need some white space or black space, whatever you want to call it. Any rising wedge breaks down to the base of the rising wedge, okay? That's like pattern trading 101, okay? Ascending broadening wedges or ascending converging wedges, they typically break down. Sometimes you see a wedge like this forming, and then it breaks down and it comes right to the base of the wedge, okay? So that's what you'll see on Investopedia. That you see quite commonly, okay? So that's one way you can kind of ascertain a probable target. Again, it's all probability based, okay? Now, we can get even more accurate using Elliott wave theory. And I mentioned this before, okay? We can target wave 2 of the primary degree. Wave 2 of the primary degree. Why wave 2? It's because people like Prechter, people like Frost, I'm talking about the authors of the wave theory, okay? 11th edition, by the way, have looked at tens and tens and tens and tens of years of decades of charts and patterns and ascertained that this is a pattern, okay? Now, personally, I've observed this as well. I haven't been trading for decades, but I've also observed this. So in my personal limited experience, I've also seen that extended waves, which this is, right? This is an extended wave 5, tend to break down when they do break down in their initial break of structure, which this would be an A, or initial break of structure of this move, right? They tend to break down to wave 2 of the primary degree, or wave 2, you don't want to say what degree it is, but you want to say wave 2 of whatever wave this is. If you count it as a 5-wave sequence, wave 2, okay? And that's why I'm targeting about 98 points for the DXY, okay? How is it going to get there? I don't know. Is it going to be a zigzag? Is it going to be a double zigzag? I don't know, okay? This is just an estimate right here. This is just an estimate, high probability estimate, right? Double zigzags are less probable than single zigzags. So I have a single zigzag. And why do I have a single zigzag? Just because it's been pumping and pumping and pumping. I don't anticipate it revisit these levels because it's so overbought, okay? I think basically there are not enough buyers. This is all like sort of, how would you say? There's no strong basis for this move. It's an extended move, but they're actually not, there's not as many buyers as it looks for this asset. It's inflated, right? Inflated, okay? Makes sense, right? But I'm just talking charts, right? And so you come down first, you retest this 14-year resistance, then you reject. That's why I have this move in a zigzag. That's why I think this is a likely pattern for the breakdown of the DXY, and that would result in a breakdown of what? 13%, okay? Which is substantial, okay? And that also takes you down Whoops. That also takes you down to very important resistance. You can see there, if you zoom out, looks like, let's zoom out on the weekly. Guys, don't forget to like the stream if you're getting value. Okay. Yeah, it looks like this is an important level of resistance. Yeah? If you look at this right here, this is the top of wave 3. It would be, right? And you formed really important resistance here. You broke it. You're going to retest it as support. That makes a lot of sense to me. That 98. So basically, I'm bearish on the dollar until it gets to that level. Until it gets to this level. For all of the reasons I just stated. Okay? I gave you Elliott wave theory. I gave you pattern analysis. I gave you basic support and resistance analysis. I'm really bearish on the dollar until we get here. Once we get here, I'm starting to get into dollars. Okay, meaning I'm taking my money out of crypto and I'm selling into dollars at that point. Okay, and that's why. So that's my target. And I know like people like I said, that Twitter account that Income Sharks. His targets are up here somewhere, which I think is absolutely goofy. Like, well, it doesn't make any sense. Maybe it's a short-term targets. I don't know. But, why would you just stop in no man's land? I have no idea. In any case, that's pretty much my analysis, guys. I'm going to look and see if there are any more comments. Amar says, great passion but high expectation. I expect a lot of myself, Amar. Yeah, I'm passionate about this. I do this every day. And I love doing this, and it's I'm passionate about analysis because I think it's beautiful. I see nature, I see order, I see beauty in charts and chart patterns and such. I think it's beautiful. I think the repeating fractals and all that stuff, I think it's just beautiful. So there's a really aesthetically, it's pleasing. It's art to me. It's like art to me. Okay, when markets print. So yeah, I'm passionate about it for sure. And again, no disrespect to MB at all. No disrespect to anybody, because we can all have differing opinions and still have mutual respect for one another as analysts and as traders. And I have complete respect for MB, complete respect for Income Sharks, and anybody else with differing opinions. I just think seasonality is bullshit, okay? I'm attacking the idea, not necessarily the proponents or people who espouse that, okay? So yeah, this is all in all due respect. Highly respect everybody in this space. Most people. I can't say everybody because I don't really know who's out there. Maybe some people I don't respect. So you can already see it moves up and out of this support level, right? So what we're gonna do now, we're pretty much done on time. So let's do really quickly a quick round robin of this watch list, okay? You see Polkadot right here at support, doing perfect, okay? You see Dodo holding support, doing perfect. Cardano holding support, doing perfect. Ethereum holding support, doing perfect. Reserve rights, we already talked about that. It's pretty much holding support, and remember this, they broke resistance. You broke resistance in the middle of the channel, and then you retested it as support. So yeah. Synthetics holding support. This is old support, doing great. Okay. Veracity holding support, doing wonderful. Right. These moves that you're gonna see coming up and out, most people are gonna underestimate it. I'll just say that most people, myself included, are going to underestimate the moves coming out of this immediate move. Most people are gonna underestimate it. Okay. Zilliqa, same thing, holding support. Right? There's just so much Ravane, same thing, holding support. There's so much support you can hold before you start to run. This is exactly what, okay, think about holding support, what it means. It means this whole time at this level, the market's been accumulating. This is what you call potential energy. This is a demand. Demand is being exhausted. Or sorry, supply is being exhausted. And demand is increasing because it hasn't moved. So momentum is increasing, meanwhile the price isn't moving. That energy, that movement is going to come in the form of a kinetic move to the upside because you've held support. Bearish or bullish at support, bearish at resistance. If you did the same thing, like if you look at the DXY, doing the same thing at resistance, that's when you want to be bearish, okay? You're at resistance for, let's just go into the daily real quick. You're at resistance, and this resistance, mind you, is not a straight line, okay? So most people won't really understand what I'm talking about, but you're at resistance this whole time. They're so long you can keep testing resistance. You're eventually going to break down in a spectacular fashion, okay? They're so long that you can test resistance and exhaust the demand. So here, demand's being exhausted. Demand is being exhausted for the dollar, okay? So back to our quick thing. BNB at support, looking great. Litecoin at support, looking great. Harmony One at support. Most of these, I mean, I haven't turned on the log scale, but I should probably turn on the log scale so you can really see what it looks like. But you're at support, you can tell, okay? XRP, we already talked about. You're at support. You're treating up an old resistance, which is the top of this accumulation range, 130 days, as support, and you're about to go and create now a huge. XRP is gonna run unlike anything else because it's one of the few assets that's up and out of this consolidation range. Finally, okay. So it'd be wise to load up on XRP if you haven't yet. Not financial advice. Dogecoin at support. We already talked about this. It tested this falling wedge as support, and it's going to run. So do expect a huge move, not only in Bitcoin, but in the rest of the market. Guys, that's it for me. I have an appointment. I hope you're going to have a great Monday. Again, take care. Thanks for joining, and I'll see you guys tomorrow for tomorrow's live stream.